I think this session we want to talk about the next 3 years in crypto. And Vitalik, I want to start with you. 11 years ago, you were a 19-year-old computer programmer. You wrote a white paper on Ethereum and ended up contributing to a new world and an asset class that today is valued at $290 billion. In 2024, some of the largest asset management firms hold Ethereum, like BlackRock. Is this what you envisioned when you walked into Star's office 11 years ago?
I mean, I have to admit, 11 years ago, I was not at all sure where any of this was going. Again, I definitely saw that Bitcoin was really promising. Actually, for the first time, even back in 2013, when I went to the conference in San Jose. And I realized, like, hey, this isn't just like 5 randos on the internet. There's like actually entire businesses, and there's people who are like really serious people that have been dedicating their entire lives to it already, right? And I mean, at the time with Ethereum, actually, I mean, at the very beginning, when I first published the idea, I was actually wondering, like, surely if no one else had already come up with this before me, then someone, there must be some fundamental reason why that idea is flawed, right? And surely like 5 very smart cryptographers are going to very quickly come out of the woodwork and basically tell me why I'm completely crazy. And that ended up like not happening. And I mean, actually, by the time I was doing my first visit to China and like visiting Star over at OKX, Ethereum had already been several months after the project's announcement. It had existed for more than half a year. I think by that time, it was clear that this was going to be something big. And by that time, it was clear some of the directions in which it could be big. If you read the Ethereum white paper from way back then, right, it talks about stable value cryptocurrencies, and today we have stablecoins. It talks about financial derivatives. Today we have DeFi. It talks about decentralized domain name systems. Today we have ENS. It talks about crop insurance, and today there's definitely subparts of DeFi that do that. The thing that it did not predict is NFTs. I'm sorry, but like the whole thing where you're like paying $3 million for a picture of a monkey, that's on you. But I think a lot of the general categories were definitely starting to be there, but like the sheer scale that it would get to, or just how quickly it would get to, was definitely something that I think kept coming as a shock to me for years to come.
Yeah, well, great. Star, I'm going to move over to you. This is the first time we have you on main stage at TOKEN2049. I know you and Vitalik go a long way back. You've told us a lot of fun stories. I'd love to hear from you how you met Vitalik and your memory of meeting him for the first time.
Yeah, actually, we met so many times back to 2013, 2014. The most impressive story to me is it's like 2017. Vitalik come to me and say, Star, can we list Ethereum to your exchange? At that time, I said, no, it's altcoin. Our exchange don't want to list the altcoin. So I feel shame about that. Yeah. And I think until today, Ethereum is most important infrastructure to blockchain ecosystem. Vitalik proved that he's a great vision builder, community builder. We, OKX, also have our commitment to Ethereum ecosystem. We work hard to contribute to the infrastructures.
Thank you. Jeremy, moving over to you. You're no foreigner to the exchange business. I recall very early days, you were running an exchange, and then
we were the first to get behind Ethereum, well before these guys. Poloniex.
Yeah. So tell us about that pivot, going from the exchange business over to the stablecoin world, and what's your passion that drove that pivot, and why did you make it?
So it's a couple things. I think the first is when we got started in 2013, we were motivated by a lot of the ideas that were floating around but had not been executed. So the idea of smart contracts, the idea of putting a virtual machine on a blockchain network, the idea of issuing other assets on these networks. And the founding of the company was on this idea that you could build a protocol for dollars on the internet, that you could do that on, and you'd have programmable money. And that was what we originally set out to actually build. And back in 2013, when we started designing this, 2014, really there was just Bitcoin. And we became very frustrated by the lack of technical progress that was being made in terms of executing on a lot of those earlier ideas. And actually, I met Vitalik pretty early on in our office in Boston after the white paper had been out, and it was very clear, like, okay, this is what we had thought was necessary, and Vitalik's gone and executed it. And then, we really by like 2017, we could actually execute on the idea. We had done all the work to get licensed to be able to move money between the existing fiat system and blockchains, and we had worked with regulators to allow us to do that with dollars and euros and pounds over the Bitcoin network. That was a kind of a hack. Although the product was good, it was kind of a hack. But really, once it became clear, like, actually, we could execute on this, we kind of discarded other projects that we had going on, sold some different products that we had off, and put 100% of the focus behind USDC, which had gotten, I think, pretty good product market fit by 2019. We worked very closely with a lot of the Ethereum DeFi protocols and projects, and I think that was critical to getting the product market fit. And then just developers wanted to build with it, and it was pretty clear to us that, like, the entire future of the company was going to be built on that.
Interesting, very interesting. And Vitalik, back to you. We can agree there's a lot of global unrest. There's a lot of economical and political unrest that we're all facing. Give us a little bit about how you see Ethereum contributing to the next 3 years of crypto and how we make the world a better place.
I think one of the truly special things about the crypto space really is just how international it is, right? And I think, this was, I think, even like especially true even in the ICO era, right? Which, I think, I actually think these days is underrated, right? Because back then it was basically normal for a new project to start, and then that project would have a US community, it would have a Chinese community, it would have a Japanese community, a European community. And it would intentionally try to bring together people interested in the project and the ideas from all across the world. And it would just be a regular thing that you would just have these common projects that everyone, all of these people who would otherwise not talk to each other can still be part of, right? And I think having this ecosystem where more things are VC dominated is I think it's definitely somewhat worse from that perspective. But I think the projects themselves they still have that kind of value, right? This is in a time of rising physical barriers, rising economic barriers, rising internet firewalls. This is one of the ecosystems that continues to be steadfastly global, and I think that itself is a really important type of value that it provides. I think both in just fulfilling a lot of the basic needs of people who end up being disconnected from financial systems, social systems, and all kinds of things as a result of all of these challenges, but also just doing its part to keep all of humanity together.
Very cool, thank you. Star, you're one of probably the most resilient entrepreneurs in our industry. And recently, you made the decision of taking the exchange business to now being a Web3 technology company. I know you're very passionate about self-custody. I think people would want to hear, what's your viewpoint on the importance of self-custody as we move into the future, especially with the global economical, political unrest?
In traditional financial system, the corporate structure or the business structure is always separated to exchange business, custodian business, and a broker business. So I don't think the crypto industry will simply copy the TradeFi structure. So crypto is still fundamentally a technology-driven industry. So there are a lot of new technology will make those typical market structure is not necessary. There will be a lot of better market structure. So self-custody is a great technology in humans, thousands of years of history. We make money. That is gold or silver. We put it back to home under your bed. So in digital times, when we get money, there are third-party agents help us manage the money. I think self-custody technology give people, give human society an option to back to you hold your money yourself, so not your key, not your money. I believe it will be a great, beautiful future. So self-custody doesn't mean no regulation, no compliance, right? So we believe the on-chain ledger is a transparent ledger. The industry can do much better activity monitoring than the TradeFi. So that is our company, OKX, believe self-custody is the future. So we make it as one of our most important strategies.
Thank you. Jeremy, Circle USDC is now built, in my view at least, the most trusted settlement layer in crypto. When you think about the next 3 years, clearly we have a use case for stablecoins today, which is around settlement and value transfer. What other applications do you envision now that the stablecoin networks are well adopted? What would you like to see in the next 3 years?
Yeah, I think 3 years goes by pretty fast. But as I like to say, we're sort of just kind of hitting the 1.0 vision for what we think this could be, which is essentially a world where the marginal cost of storing and moving value goes to zero, and where the user experience of transacting over these mediums is as simple and seamless as the other kinds of user experiences that we have with major categories of software utilities on the internet. We're not quite there. We're getting really, really close. And so I think maybe over the next year, I think we'll get there on that utility. And then I think it starts to get really interesting. When internet utilities made the marginal cost of, say, storing and moving information zero, or the marginal cost of having a communications connection to someone zero, or the marginal cost of distributing software effectively became zero. When you change the fundamental unit economics, the kind of net world output of that thing goes fairly exponential. And I think that will be similar with money and transactions. So it strikes me that as we approach that point, the velocity of money in the world, in the actual economy, will increase considerably. Like the amount of net world output growth in those other areas was like million-x over some period of time. It was just extraordinary, and we see that. So the implications of that are really profound. If we have this incredibly high velocity of money, the ability for people to benefit from that economically is significant. And to the point of kind of the global nature of all this, we've never had a system of value exchange with that efficiency that is truly anyone connected to the internet who can participate in that. And so the implications are significant there. I think the thing I'm most excited about is we're also like in the very early stages of programmable money and programmable money use cases. And while we have huge advancements that have happened with that with DeFi, we're still barely scratching the surface there as well. And I think, so I'm interested mostly in what people are going to invent in terms of intermediating value that has never been invented before. And I kind of refer to it as similar to like when the iPhone came out. Like there were a lot of ideas about mobile, but until you had the surface area that allowed you to accomplish those things, you really couldn't envision everything that was going to be possible. And I think we're approaching a point where robust, mature, infra for writing code to intermediate value, and that where it's effectively frictionless and seamless for users, we're approaching that. And so I'm super excited to see what happens there. And I think one area in particular I'm really interested in is on-chain credit and credit intermediation. That to me is like real economic output is time value of money transformation. That is how economic growth happens. And we are not yet doing that much with that today on-chain. And to me, that's the deepest transformation that can happen in terms of increasing global economic prosperity for people is if we can really move unsecured credit and other forms of credit onto these networks. And so that's something that I'm pretty interested in.
And now, Jeremy, what about enterprise use cases, say in Silicon Valley? I know there are developers who are working within our industry, but what about developers outside the industry? How do they view stable coins or USDC, especially given you guys are regulated? What's the enterprise use case possibility in the next, say, 3-5 years?
Yeah, I think there are a lot of forward-leaning payment companies like Stripe or neobanks and others that are starting to use stablecoins, which is great, but the use is pretty small. In terms of like enterprises, meaning major companies, it's very small. And we still have a critical thing that needs to happen, and the good news is it is happening, which is that stablecoins need to be considered legal electronic money. They need to be treated as a cash equivalent instrument on a balance sheet. So an accountant or a finance person in a company can say, okay, this is digital cash, and I can account for it, and I can report on it. And once it's valid, it's a valid form of money legally, and you have that consistently around the world, which we will, then I think the uses by every type of institution will explode, right? Because you need the technical utility to be there, and I think we're solving that. You need the legal certainty there in order for people to take it on, because I can't tell you how many like large companies, if you have a conversation, they'll go, I don't know what this is, and I can't, it's like really hard for me to account for this, and so therefore I'm not going to do anything, even if the technical utility is strong.
And what do you think it takes us to get there?
I mean, basically, there's stablecoin laws that are being passed in every major financial market center in the world. They're either passed or coming into law over the next 12 months. And so I think that's basically happening. So that's the good news. And so I think technical progress with infra and UX and legal certainty sets up the conditions for this to be pretty explosive in terms of usage beyond that.
Very cool. Thank you, Jeremy. Vitalik, there's been this exponential rise of layer 2s. Tell us at a very basic level, good for Ethereum, bad for Ethereum? How do you view them?
I mean, I think Ethereum could not have gotten to where it is without them, right? I think the Ethereum layer 2 ecosystem has just brought such a huge amount of talent to the ecosystem, not just in terms of like building out the raw technology, which includes proving systems, it includes zero-knowledge proofs, it even includes client implementations, but also all of the talent in bringing all kinds of people into the Ethereum ecosystem that otherwise would not be, right? And like basically, Ethereum gets to have like several dozen of these sub-ecosystems, each of which are individually going out and attracting users, basically at the same scale that like otherwise a layer 1 blockchain would be, and like they're all bringing this activity in and still being a part of a big, greater Ethereum ecosystem at the same time, right? So I think so far it's been hugely positive just in that way, right? And I think like the fact that the layer 2 ecosystem has done so much on scaling has also freed up core developers' time to, like finally get the merge done, which like was done only I think about 2 years and 3 days ago. So happy second birthday to proof of stake. Right. Also, all of the improvements in account abstraction, like a lot of the EVM upgrades that we've been considering. I do think that there are real challenges. Like I do think that the fragmentation problems that people point to, they are real, and there are a number of initiatives that actually are already happening to try to resolve that, right? So, yesterday at some of the Ethereum events, I talked about the chain-specific addresses, cross-chain, asset movements using liquidity providers, cross-layer 2 light clients, and all kinds of things that can be better standardized between layer 2s. And actually, I'll be continuing to talk about those things, actually talking about alignment between like layer 2s and layer 1 in only another couple of hours today at the Ethereum event. So It's an ongoing topic of discussion. I think both on the standardization front and on the economic alignment front. And so I think the positives are large, and we've seen them. And the challenges, I think, also both the Ethereum and the foundation are taking them extremely seriously and have been working, I think, already very, very hard this year to continue addressing them.
Very cool. Star, you talk about, I know we've had conversations where you say you'd like to see more applications in Web3 using Web3 infrastructure, but with a Web2 front end. Can you talk to us about that?
Yeah. I think in the last 10 years, the crypto industry created a lot of successful assets. Like a Bitcoin is one of the top 10 market cap assets in the world. There are Bitcoin ETF, make people easy to invest in Bitcoin. But actually in the last 10 years, the whole industry, we keep to talk about crypto applications. There are some success applications like RV Compound, which is a DeFi protocol. But why crypto application move forward very slow? So my opinion is there are two major block points to crypto applications. First is on-chain currency, which Jeremy's company already did a great job in not so many years. So now, can you imagine, we can code a currency in our apps. This is a stablecoin, solve this problem. The second, I believe, is a wallet. So most of the crypto wallet, like OKX Web3 wallet, MetaMask, is still a wallet to native on-chain user. So you need back up your primary key. You need to make sure in whole your life, you cannot forget or nick your primary key. I think the second reason is like a recognition reason. If any finance company build a D-app through the current infrastructure, their regulator will ask them two major questions. Who is your customer? How you manage the activity in your platform? So I believe in the next 3 years, the industry should create some easy-to-use wallet, also can match TradeFi regulation requirements. So I think, OKX, we have our strategy. A lot of other companies, Coinbase, do the same thing. So we believe there are a lot of new technology, like a Neo2, multi-sig, abstract account wallet, passkey. So based on a lot of this new technology, it's possible to build a very easy-to-use wallet. It's like a Web2 experience, but actually it's a Web3 wallet. There are also a lot of new technology like a ZK, zero knowledge proof. It can allow the wallet use ZK KYC to verify your customer. So the app can choose to, for example, I only service Singapore customer, or I want to exclude a Singapore customer. This kind of new technology will make these requirements happen. So I believe in the next 3 years, crypto finance will really become a big revolution. Every company, banks, insurance company, you can build your D-app based on the current infrastructure. Also, I believe stablecoin payment can be a very success application in the future. We, OKX, also has a strategic project on this. So I think 3 years later, when we look back, we will find crypto is not just trade asset. Crypto will really become infrastructure to everybody's life. Massive retail user can easily use a crypto wallet, which is a KYC with activity monitoring, which can easily finish your payment, can interact. A lot of banks will develop a D-app. You can use your wallet, also authorize your funds to the different D-apps. So it will be very exciting in the next 3 years.
Thank you. Jeremy, question for you. Every part of the world has a different need for banking and even crypto. For example, I grew up in a country called Pakistan. Very different economic status. How do you see the adoption of coin networks. Whether you're in the United States, people will perceive it very differently. Banking systems work. But then a country where there's hyperinflation or there's a huge population of unbanked, what are the trends that you see today, or what are you expecting in the near future, over the next 3-5 years, ways adoption will differ in these different regions and markets?
Yeah, a couple things. I think the first is nowhere in the world had anyone ever had a form of electronic money that is effectively has a zero marginal cost to store and move it, and it's fully programmable with verifiable, provable code. So that's like an innovation that everyone, whether you're in the United States or in Europe or you're in Pakistan or whatever, like that's just like net new human innovation that people can build on and will unlock a lot of utility. But specifically to the question of sort of the differing needs, I mean, very clearly, people around the world would like, a stable value unit of account that is a really efficient medium of exchange, and I think, dollar stablecoins are providing that. And so we see a lot of growth right now, and really over the past couple of years, and accelerating growth in many parts of the world where people just want to transact in this new, more efficient medium, and where they want to keep that value in dollars, both businesses and individuals and households. And I think once these UX problems continue to get addressed, as we've talked about a little bit here, and like liquidity becomes like more seamless everywhere, and that's a problem that we're helping solve along with others in the industry. I think that I kind of refer to stablecoins as over-the-top money. Over the top was this concept of over the top software delivery, over the top communications, over the top television. It was sort of like, well, once you had protocols that allowed just anyone with software apps to then do those tasks, then it went really large. Billions of people could use it. It changed unit economics, and in many cases, governments had to react to that and adapt. And so we have over-the-top money now, and I think it's accelerating, and it's going to continue to accelerate. I guess my long-term view is that just in internet scale kind of forms of economic activity, which we're seeing kind of borne out here, it is going to force governments to change fiscal and monetary policy. I don't believe that there'll be a need for as many currencies in the world. There'll be different competition amongst all of that, but I think that the end result will actually end up being a smaller number of broadly adopted kind of stablecoins and stablecoin networks.
Very cool. Thank you, Jeremy. I know we have a few minutes left. I want to give you guys a power question. There's been a lot of volatility in our industry over the last few years. And arguably, there's been some healthy adoption in crypto and our ecosystems. And arguably, there's been some adoption that perhaps we could have lived without. I'll start with you, Vitalik. How do you think we achieve healthy adoption over the next few years?
I think my answer is basically the same as the answer I gave here half an hour ago, right? Which is that the thing we're still early to is blockchains actually being affordable for regular people, right? If you think about like people trading, the $3 million monkeys or like any of these applications that people tends to criticize, right? A lot of that stuff, like it works with 5-cent fees, and it still works with $500 fees, right? Now, if you think, on the other hand, about enabling people in countries with challenging political environments to have their own independent life savings and to engage in economic activity and transact with the rest of the world, then like at 5-cent fees, that's actually a very viable thing. But if the fees go to $200, like they're just going to say screw you, right? Mm-hmm. And then on top of that, you have all of the costs from the security issues. Like, I think if you added up all of the dollars that people have lost to fees and all of the dollars that people have lost to people's coins getting lost or stolen, they'd probably end up being pretty similar to each other, right? I mean, I could even see the security losses being a bit greater, right? And I think the technologies for minimizing both have really improved a lot. And so I think it's only really basically now that the technology actually has gotten to the point where it is something where you can credibly go and say, this is something that can directly right now improve the lives of even just the average man on the street that's just like dealing with like 10 or 20 dollar amounts with their family, right? And now that we actually have that scale, I think it's up to all of us to like actually build out the rest of the ecosystem and take advantage of it.
Very cool. Star, purely from an engineering standpoint, how do we welcome better crypto adoption over the next few years?
I would believe in next 3 years from individual perspective. So maybe billions of users will get a Web3 wallet. It will be an easy to use wallet. It's a Web2 experience, but fundamentally it's a self-custody wallet. This wallet also can match the regulations requirement. From business perspective, more and more companies will choose to develop a DApp or convert their business model from centralized server model to a DApp model. This business application is transparent, and all of the crypto wallet users can engage with different companies' DApp. This will become a great crypto finance ecosystem.
Yeah, thank you, Star. And Jeremy, for you, I think stablecoins, in my view at least, do welcome and bring more healthy adoption than, say, the more speculative assets. What's your viewpoint? 3 years out, how do we make sure we welcome and bring in more and attract healthy crypto adoption in our markets?
Yeah, so it's interesting. I'm very, very optimistic right now about our ability to make really material progress for people broadly. I feel like and this is just like the hard work of tons and tons of people in the industry and developers who are solving some of the most critical kind of last mile problems in terms of privacy, security, identity, naming, the efficiency, kind of, scale and efficiency. And so I'm more optimistic than ever that like these things are going to get solved. And there's great things that are right in front of us right now on that. And so as a technologist, by background, like I'm very optimistic. And so I think we just need to keep doing those things. And if we have, these sort of legal clarifications that are coming and we keep doing those things, I see 3 years from now, we're going to be in a really extraordinary period of, it's kind of like in 2004, like the internet finally became, did the things people wanted to say, and it just never stopped. It just kept really, really growing and transforming. I think we're approaching that point with crypto.
Thank you, Jeremy. I could go for another 30 minutes, but we have big tech saying, please wrap up. I want to thank Vitalik. Thank you very much. Star, thanks for joining us. And Jeremy, thank you for the conversation. Thanks, everyone, for listening.